The Quint.
Thanks for joining us on Power Lunch. This is Bloomberg Quint and I'm Ira Duggal. Let's get you the headlines. Indian markets hold on to morning gains with all sectoral indices trading in the green. L&T and Maruti Suzuki trade strong ahead of third quarter earnings. Moody's cautions against fiscal risks from support policies announced for SMEs and low-income households, as well as the farm relief package under consideration. The Supreme Court of India upholds the Insolvency and Bankruptcy Code in its entirety, including the ban on promoter bidding. The CBI has registered an FIR against former ICICI CEO Chanda Kochhar, her husband, and Videocon chief Kochhars Dhoots over an alleged quid pro quo. The 1st of April 2020 will be a Y2K moment for the Indian auto industry as stricter emission norms kick in. That's word coming in from M&M Managing Director Pawan Goenka. And the US and China are miles away from resolving their trade conflicts, says US Commerce Secretary Wilbur Ross in an interview with Bloomberg News. All right, first let's start with how the markets are faring. Yatin is here with the afternoon check.
Afternoon, Ira, and as you mentioned, all the sectoral indices in the green, and more importantly, we are around that 10,900 mark on the Nifty. 40 advances to 9 declines. The market breadth is quite good in trade today. What's gaining in trade is Yes Bank, second day in a row, post the earnings and the new CEO announcement. The stock is doing well. 6% up for that one. Not only that, the Bharti Airtel group companies, Infratel as well as Airtel, both of these stocks are gaining traction, top gainers on the Nifty at this point in time. And what's doing well apart from that is HCL Technologies as well as UPL. What's not doing well is Ultratech Cement, and that Birla Group company is cracked almost 5% in trade after the management yesterday to the analyst community in the conference call spoke about weak pricing trends in the marketplace. Not only that, we have the Z group companies, Z as well as Dish TV. The SL group companies are down and about in trade. Z hit a fresh 52-week low in trade today, so is Dish TV trading by almost 6.5% lower. What's active in trade is, Reliance Industries, Biocon post the results, as well as HEG. That stock is in focus. Both HEG and Graphite are not doing well in trade. Second day in a row, we are seeing double-digit cuts coming in for both of them. And, in the F&O space, do watch out for Maruti as well as Diwan. Both of these companies will be reporting their quarterly earnings. Maruti is trading firm ahead of the earnings, which will come out probably in an hour or so. And Diwan Housing, that stock is in focus, 6% up for that one ahead of the earnings.
All right, Yatin, thanks so much for that afternoon check. Keep an eye on bond markets. Remember, we are a week away now from the budget, and almost everyone is asking just one question. How is the government going to meet the 3.3% fiscal deficit target? The government, of course, so far has maintained that they will. But this morning, rating agency Moody's has put out a cautionary note on fiscal risks emerging from new policies. Moody's writes, and I quote, over the past month, India's government has announced a range of policies to support the incomes of small enterprises and low-income households. It is also considering additional steps to support farmers facing financial distress. In the absence of any new revenue-boosting measures, the policies will collectively make it harder for the government to achieve its fiscal consolidation objectives. Remember, Moody's is the only one of the rating agencies which had upgraded India on the hope that there's going to be a structural change in how government finances are managed, and they're now putting out a cautionary note saying that there are some risks that are emerging. Let's move on to the other top story today. The Supreme Court has upheld the Insolvency and Bankruptcy Code in its entirety. The two-judge bench this morning quashed petitions that challenge the law on grounds of discrimination. Payaswini Upadhyay joins us with the details. Payaswini.
Well, most experts in this space were expecting this outcome, but it surely helps to have a definitive answer from the Supreme Court, which is essentially that the constitutional challenge mounted against the Insolvency and Bankruptcy Code has been dismissed. Now, there were two broad arguments that were presented to the Supreme Court. One was by operational creditors, who said that the code doesn't lay down any intelligible differentia between operational creditors and financial creditors. Now, remember, operational creditors under the IBC can initiate insolvency, but they don't get to participate, or they don't get a seat on the table of the creditors committee, and that was their grouse for them to agitate before the Supreme Court. The second important argument was under Article 19(1)(g) of the Constitution, where promoters essentially said that you're placing the fate of the company in the hands of the resolution professional who's not equipped to manage a company. And by doing so, you're denying our right to carry out business. Both these grounds have been struck down by the Supreme Court. So this basically also shuts the door for good for promoters, at least, to come and challenge the code in any fashion on Section 29A, which bars them from coming in as resolution applicants. But we spoke with experts who applauded the outcome in this case, but also said that the door is still open for promoters to come in under Section 12A of the code, which is essentially if 90% of the COC members vote in favor of withdrawal of an insolvency application, and a settlement outside of the IBC can be achieved with promoters. We spoke with Shardul Shroff and Nilang Desai on the outcome today. Here's what they had to say.
Issues of constitutional validity are now finally sort of put a rest to. They should not arise again and again now. There will be those cases where there may be sort of pending proceedings for allowing withdrawal even after the EOI, but that's a question which the NCLT and the NCLAT cannot approve. Only the Supreme Court can.
I don't think 12A really is, anything to do with 29A, because really what 12A says is that if you satisfy 90% of the lenders, then you can take your company back. And 90% of the lenders is a really high threshold. Well, 90% of lenders and the applicant. This is a really high threshold. So effectively what it's saying is if you resolve the issue, then you can come out of the IBC. Now, surely that's a pretty sensible way to proceed. And I don't think that's really in conflict with 29A at all.
All right, the other big development over the last 24 hours has been that the CBI has filed its first information report in the Videocon loan case. We're just going to reiterate what has been said because this is an important case. This is a case against one of India's former leading bankers, Chanda Kochhar. But more than that, it also challenges the kind of processes that have been used at that time, India's largest private bank. Just reiterating what the FIR has told us, or the incremental information that the FIR has given us. Firstly, it has given you a breakup of the individual loans, the 6 high-value loans that were given by ICICI Bank to various Videocon group companies. The loans include 175 crore rupee term loan facility to Millennium Appliances, another 300 crore to Videocon International Electronics, a 240 crore sanction to Sky Appliances, also a Videocon group-linked company, another 110 crore to Techno Electronics, a 300 crore loan to Applicomp India. These are all Videocon or Kochhars Dhoots linked companies, and then a 750 crore loan sanctioned directly to Videocon Industries. I just want to stop here for a minute and explain that the bank, remember, had defended itself saying that it had sanctioned loans as part of a consortium. Well, the only loan which was part of consortium lending, from what we can gather, is this 750 crore which went directly to Videocon Industries. So there are a whole bunch of other loans which have been sanctioned by ICICI to Videocon group companies. We don't know whether those were also part of consortium loans or not, or whether those were standalone facilities that had been given out by ICICI to these companies. Now, in the FIR, the CBI in particular points to one specific transaction where they seem to allege quid pro quo. We'd spoken to a former CBI joint director yesterday who said that, you can't raise a question about the lending, you have to raise a question about the quid pro quo. And this is the case in which they are alleging a direct quid pro quo. There was a 300 crore loan to Videocon International Electronics which got approved on 26th of August 2009. This loan was dispersed on the 7th of September 2009, and it appears that on the 8th of September, the very next day, Kochhars Dhoots transferred 64 crore to New Power Renewables, which is a company owned by Deepak Kochhar, Chanda Kochhar's husband, through another entity, Supreme Energy, which is also essentially controlled by Deepak Kochhar. So that is the area where the quid pro quo is being alleged. The other part of the CBI's FIR, and this is not not in the category of accused, but the CBI in its FIR says that it may question other members of the credit committees, because remember, loans get approved not by individual bankers but by credit committees, and those credit committees were at that time thought to be very robust. Those are some of the names on your screen, including KV Kamath, who headed the credit committee between that 2009 to 2011 period where most of these loans have been given. So the CBI FR says they may question some of these bankers. Sandeep Bakshi is the current CEO of ICICI Bank. Zareen Daruwala is the current head of Stanchart in India. We've got Mr. Kannan, who heads ICICI Prudential Life Insurance. So, all people very much active in the banking industry. We'll see which way that goes, although Mr. H.P. Ranina says that, it could go either way. They could be proven to be innocent, or there could be questions raised as well. Actually, listen into some of those comments by Shantanu Sen, formerly of the CBI, and Mr. Ranina on how we should read this FIR.
It is the quid pro quo paid to Deepak Kochhar, 64 crores plus 6% commission. You see, it is that aspect which makes it criminal. Giving loan, being a part of the consortium, I think the whole loan is about 30 to 40,000 crores.
Exactly.
Yeah. So that is not an offense, and that is not the job of the CBI to look into.
First information report has been filed, so now further investigations will start. Other members of the credit committee who sanctioned the loan, which was given to Videocon Group, will obviously be questioned. They're bound to be questioned. They may not be currently named in the FIR, but they will be questioned, I'm sure about that. And once that happens, then a better picture will emerge exactly what happened.
All right, another big banking story. After months of uncertainty over leadership at Yes Bank, the private lender has named Ravneet Gill as the next CEO. He was currently heading Deutsche Bank in India. Vishwanath Nair is with us to tell us who is Ravneet Gill and also some of the views coming in from brokerage houses.
Right, Ira. So Ravneet Gill, as you said, the current chief of Deutsche Bank in India. Under him, the German lender has about a book of nearly 1 lakh crore, of which about 47,000 crore comes from the funded exposures, 53,000 crore comes from non-funded exposure, largely corporate exposures in both these books. Mining, engineering, metals, infrastructure, these are the kind of loans that typically they get into. They have a retail business, something that they really wanted to push forward from 2014. They wanted to grow their housing finance and small business financing businesses. But of course, while that run lasted for a while, bad news started cropping in very quickly. The housing finance business was considered largely a very low-risk business in India. Deutsche Bank has a 3% NPA as of March 2018, and that's a significantly high NPA ratio when compared with some of the other lenders in India. But rest assured, they in 2018 wanted to actually sell that business under the new leadership. The LIBOR scandal happened, some of that senior leadership went, new leader came in, and he had a restructuring plan. As part of that plan, they wanted to sell this retail business. That plan was eventually shelved, but of course, that was something that Deutsche was toying with. Probably with Yes Bank and his appointment at Yes Bank, Ravneet Gill may look at that as a retail platform because the bank has a very strong retail liabilities franchise already. They are growing the retail lending business. 15% of their book comes from retail. About 17% comes from the SME financing book. So that probably becomes a good platform for him to realize that ambition. But other than that, transaction banking is something that Deutsche Bank has been very strong, and Ravneet Gill has led that business within that bank. So that is something that Yes Bank will benefit from. They will get better business. Remember, transaction banking in India is a difficult business because it's a very sticky business. Typically, when a customer signs on with a bank, they don't really leave that bank. So it becomes important to sign on new customers. Apart from that, Ravneet Gill, again, he beat an internal candidate, Rajat Monga, to get this position. So the future of Rajat Monga in the bank, that's a little, uncertain at this point in time. He has been nominated for an elevation to executive director position, but there again, you need a co-promoter, Madhu Kapoor and family's approval for that. We don't know whether that approval is coming in anytime soon, but only after that will he have a board position. Currently, he's still only heading businesses. But in the absence of Rana Kapoor, there is going to be an interim arrangement between Rana Kapoor's exit and Ravneet Gill's takeover. the expectation is that Rajat Monga will manage their interim transition, but of course the board will decide on the 29th of January when they meet. So that's when we'll know better.
So, the stock market is obviously reacting positively. You've seen over a 4-session period, close to a 25% jump. I think as one person said to me, he's a low maintenance candidate. He's going to sort of go there, put his head down. Plus regulatory approvals are in place. He's an outsider.
Exactly.
So that's the view emerging from brokers as well?
Largely yes, because the expectation is that since he's an outsider and since much of the senior leadership at the bank has been with the bank from the beginning, so he will try and adapt with the system and trying to grow the bank from within the system rather than try to bring his own ideas and try to change a lot of new things. So yes, low maintenance candidate, the expectation is that there's going to be some fresh ideas, but largely a path course for the business.
All right, Krishna, thanks so much for that. That's the transition at Yes Bank. It was long awaited. Let's move on. The MSCI has proposed changes to the way it calculates foreign ownership and investment limit for stocks. The proposed methodology is not good news for Indian stocks. Kannan is here with us to explain why. Kannan.
So MSCI launches the consultation paper. Among other things, one of the proposal was to change the methodology, of calculation for foreign ownership limits, for Indian securities. So the result of this consultation process will be announced on March 29th. And if the proposals are accepted, and this will be implemented, during May 2019, during their, semi-annual review. So before I go to that, what the proposal is, let me take a step back to explain what is the background, right? So you might remember that, in April, 2018, SEBI in consultation with RBI announced new system for monitoring foreign, investment limits, right? So that came into effect in June 2018. So subsequent to that changes, so depositories like CDSL and NSDL has been, appointed to monitor the foreign investment. So subsequently, what CDSL and NSDL did was to calculate the foreign room, the breach limit, which is equivalent to the RBI limit, and the red flag, caution limits. So MSCI currently deletes the securities from the Indian index if it is there within the 3.75% of that breach limit or under the red flag, right? So the computation for headroom or the red flag or the breach limit includes like the aggregate foreign portfolio investment limit permissible within the larger FPI limit, and also considers the total the foreign investment against the overall sectorial limit. The key here is the depository receipt, which is the ADRs and the GDRs, are considered as a part of the sectorial limit and not the FPL limit. So what the changes, so currently the MSCI doesn't include, currently the MSCI includes the depository receipt in their FOL calculation. So what is the new proposal? So the new proposal says not to consider the depository receipt in calculation of the foreign ownership limit. So why is MSCI saying this? There are two things. One, DRs, the depository receipts, are illiquid in nature, and they feel that this is quite inaccessible to the foreign investors, and that is why the MSCI is proposing these changes of not including DRs in calculation of the foreign ownership limits. So according to this, the current MSCI weightage for India on the emerging market index will come down by 23 basis points. So currently it is 8.78. It will now drift down to 8.55. So there is a 23 bips drop. So MK Global Research has done a kind of a research on what will be the potential outflow following this change in the weight reduction, right? So accordingly, it seems that if the proposal are accepted, there could be close to $1 billion of outflow from the MSCI India constituent. And the two stocks, the largest that could have a potential impact would be L&T and ITC. So according to the MK research, the L&T outflow could be as big as $135 million, which is actually 2.8 times of the average trading volume, followed by ITC at $96 million, which is again more than 2 times of the average trading volume. So the other stocks that could be impacted on the top 10 list could be Tata Motors, M&M, Dr. Reddy, GAIL, Indelco, Bajaj Auto, Tata Steel and LIC. So in a sense, if the proposal are accepted, and this is not a good news for the Indian investors to cheer, as it could actually potentially trigger $1 billion dollar of outflow.
All right, Kannan, thanks so much for explaining that to us. Yeah. Let's move on. Mutual funds saw a lot of redemption pressure in the third quarter as a liquidity scare triggered what some would call a knee-jerk reaction from investors, but not all fund houses were badly affected. So Amit Sarkar has compared the performance of the two largest fund houses to see which one performed better in the last 3 months of calendar 2018. So Amit.
So if you see that standalone performance of HDFC AMC and Reliance upon asset management company, HDFC AMC has performed much better on that front. Now, HDFC AMC's revenue grew nearly 2%, while the net profit growth was nearly 25% compared to last quarter, aided by the absence of input upfront commissions that was seen in the third quarter of financial year 2019. While that of Arnam, on the other hand, saw a revenue drop of close to 12%, while the net profit declined by nearly 17%. Now, revenues declined because of two reasons. First, muted AUM growth because of volatile equity markets, and second is the change in product mix, that is more funds coming in toward low yielding liquid and ETF funds. Now the percentage drop seems to be more bad for Arnam, but if you see the unit wise data, you will get a much more clear picture of who has performed much better. Now, due to volatility seen in the equity markets, the revenues of both the asset management companies, that is HDFC AMC and Arnam, has been impacted. HDFC AMC's revenue as a percentage of AUM, now that has declined by 1.5 basis points, while that of Arnam has declined by nearly by 1.8 basis points. And on the bottom line front, if you see, HDFC's net profit as a percentage of AUM, now that grew by nearly 0.7 basis points, and that is purely on the back of no upfront commissions seen in the third quarter and because of a higher other income in the third quarter of financial year 2019. While that of Arnam, now that has declined by 0.7 basis points, and that is because the company has been following a trail basis commission model right from the start, and a very small part of the total expenses belong to this upfront commission. That's the reason they did not get much benefit of this ban that we had that we had seen on the upfront commissions in the third quarter of financial year 2019. Now the equity AUM, now that which earns the higher yields for this asset management companies, how has that grown in the third quarter? Now here Reliance Nippon's AUM is way lower than that of HDFC AMC, but compared to last year, if you see, equity AUM of Arnam has grown at a faster rate. Now Reliance Nippon's equity AUM grew at a rate of around 11% compared to last year, as compared to a 2.6% growth rate seen by HDFC AMC. So that on that front, Arnam has seen a better growth rate. Lastly, on the valuation front, if you see, HDFC AMC continues to trade at an expensive valuation when compared to Arnam, but that has been the case for both the companies right from HDFC AMC's listing. If you see the PE for HDFC AMC, it is close to 15 times, while that of for Arnam is close to 15 times, while that of HDFC AMC is close to 32 times. But that has been the case for both the companies right from the listing. But what is more now important for both the AMCs is the outlook and from where the growth will come in for this AMCs. Now, two things that that the investor needs to watch out for when it comes to the asset management companies in the financial year 2020. First is how the flows come in, given the fact that equity markets are expected to remain volatile in the first half of calendar year 2019. So that will be one thing to watch out for. And secondly, starting from April, how do the AMCs share the lower total expense ratio with the distributors, because that will also that will also count for the kind of revenues that they'll get in from the mutual fund distributors, because a lower if they pass on the benefit to distributors, then the revenue flow coming in could be lower for the asset management companies starting from financial year 2020.
All right, Soumit, thanks so much for that. Infrastructure and construction major Larsen & Toubro is likely to report a stable December quarter, while other income may aid the bottom line. Order flows may decline on account of a high base. Darshan Mehta is here to sum up what the street is expecting. Darshan.
Yeah, so 15% top line growth and a 16% EBITDA growth is something that we're seeing. So that is why our margins will be pretty much close to 11%, stable from what it was last time around. Profit, yes, as you pointed out, higher other income may this time around, aid the profit growth of close to 25-27% that we're looking at. Order flow is important. 35 to 40,000 crores of order inflow is something that we are anticipating, which will be much lower than what we saw last time around, because the base was extremely high for L&T last time. And the other factor that we need to watch out was a lot of orders got preponed into the second quarter compared to the first quarter. It will be important to see what happens with the infrastructure order book. It's expected to lead revenues. Domestic order flow is extremely strong, but much more on the guidance, what the company is saying in terms of the revenue guidance and the order inflow guidance. That's the most important thing that we need to watch out once the numbers come out and once they start addressing this in the press conference today.
All right, Darshan, thanks so much for that. A decline in sales volume for Maruti Suzuki is likely to keep its third quarter performance muted. What's adding to the headwinds is the rising input costs and heavy discounts. Yatin is giving us the expectations. Yatin.
Well, if you look at the third quarter Maruti Suzuki, we are expecting a muted 1% growth in the revenues, which are seen at close to 19,600 crores as per the Bloomberg poll. And more importantly, the EBITDA and the profit are expected to fall by nearly 14% and 6% respectively. This is on the back of rising costs, higher discounts, as well as pressure because of the weakness in demand. So in general, because of lower volumes, we could have some negative impact of the operating leverage on the operating performance. Margins is something important that we'll be watching out for, which are expected to be 13.4% versus a level of 15.8%. And if you look at the trend also, last quarter, Maruti posted a margin figure of 13.1%, which means that probably the street is working with a number of 13.5%. And if there is a miss, probably we could see some downward rating on the analyst estimate front, because the management already has reduced its volume guidance for FY19 from the previous 10% growth to now a level of 8% is what they have guided for. So let's see how really Maruti report numbers, which would be out anytime soon.
All right, thank you so much. The 1st of April 2020 will be a Y2K moment for the Indian industry, auto industry that is, says M&M Managing Director Pawan Goenka, speaking to Menka Doshi in Davos. He says some Mahindra vehicles may miss the deadline to switch to Bharat Stage 6 emission standards. Listen in.
I have been sort of floating this idea of 1st April 2020 being the Y2K period for auto industry. Because everything will change. Just imagine the complete fleet sort of sales, which is 500,000 or let's say 400,000 vehicle a month, changing overnight from BS4 to BS6. And it's a very huge task in terms of supply chain management, in terms of ramping up BS6, ramping down BS4. And now, since there is a constraint on not being able to sell beyond 31st March, we have to make sure that all our inventory is sold by 31st March. And it's very difficult to control that. So what will happen on 1st April? Very hard to imagine. In terms of meeting the norms, everybody is putting a brave face that yes, it's a regulation, we'll meet it. But the fact is that as it is, we were really stretched in terms of 31st March for manufacturing last date. What has happened now with the sales date being 31st March, we have been pushed another 2 months or so. Everybody will work hard. I don't think anybody can guarantee that they'll be all ready. What I can say is that for most of our high volume products, we'll probably be ready just in time. Okay. But some of the lower volume products may spill into April, May.
And that could be so disruptive from a sales point of view, because you won't be able to sell if you don't have the product, right?
So we'll obviously work hard to minimize the
Sure, I understand that.
But you should also keep in mind that there is a very high likelihood of pre-sale happening because of the BS6 prices being as much as a lakh more for diesel vehicles. There are a lot of pre-sales. So as it is, April, May will be a dull month, independent of whether we are ready or not ready.
Both the US and China are keen to strike a deal when it comes to trade, says US Commerce Secretary Wilbur Ross, speaking to Bloomberg. He, however, clarified that they're miles away from resolving some of the teething issues like intellectual property rights in particular. Listen in.
Let's talk about China first, because as I said, Liu He, the vice premier of China, will be coming to town to visit next week. You've said this is a long journey, and we shouldn't expect this to be wrapped up right away. How long a journey is it? I heard miles and miles, but does that take us into the summer? Does it take us for another year? How long is it?
No, I think what I was trying to articulate is that there are a couple sets of separate issues. The relatively easier ones are the direct trade issues. Will they buy a few more soybeans? Will they buy some more LNG? That just would mean them diversifying their existing sources to supply needs that they have. The harder issues are the ones that deal with structural reforms, particularly intellectual property rights. And that one is also important to the Chinese as they're moving up the intellectual value-added spectrum of manufacturing. They're developing more intellectual property of their own that needs protection. You've seen a huge increase in patent filings by Chinese companies. So that's a big issue. The equal market access is another very big issue. The idea of forced technology transfers is a huge issue. And those structural issues are, for the most part, what the Ambassador Lighthizer 301 investigation was really all about. And that's the important but very complicated part of the trade discussions that we hope to get solution to. We want to make a deal. We believe the Chinese would want to make a deal. Hopefully, those two general impulses can result in a very finite, very detailed, very enforceable set of commitments.
That's a wrap on this edition of Power Lunch. Thanks for watching. A lot more coming.